Let me start with the equity market. Interestingly, the equity market has come down to a 9-month low yesterday. That's a 4-day losing streak, extending the losses we've seen over the last few sessions. Obviously, the appetite for risk is really low in Nigeria, with many investors looking at uncertainty in the banking sector as something to really consider at this point. And of course, the fixed income side is looking much more interesting with continuous rate hikes, which we've seen from the Monetary Policy Committee. Joining me in the studio to take a look at the fixed income side of things is Humphrey Uzoh, like you said, a securities dealer at Diamond Bank. Thanks a lot, Humphrey, for joining us on the show today. First of all, let's talk about where yields are right now. We saw that huge volatility last week with the news about the loosening of restrictions for foreign investors' participation in the bond market. What are we seeing as at yesterday? What was the state of play?
Thank you, Wole. Let's start from where we are coming from. The government of Nigeria coming with a huge budget, characterized by heavy deficit. CBN looking at it and saying that, yes, we have to fund this. And how do we fund this? Through the local debt and securities. And they said, okay, let's hike the rates just to stimulate interest in domestic assets. At the end of the day, I feel the CBN are not really seeing the bites in the securities market, talking about fixed income, and they decide, how do we encourage foreigners to be involved in this? They decided to stimulate them by opening more of the economy. That's why they removed a restriction on the fixed income flow.
And like I mentioned, last week, because of that, markets are very volatile, yields dropped significantly. Yeah, what was it like yesterday?
Yeah. Like you can say, from when they did this, we expected a huge drop in yields. That's the price is increasing. Reason is very easy. Most domestic banks are just trying to take position in anticipation of the scramble that will actually come from this investor. Actually, we've not actually seen the actual flow. But the issue is that this our market is characterized by a whole of expectation and sentiments. As of yesterday, 20-year bond is trading at 12.79. But before then, it was a bit lower because the issue is that things are trying to reverse a bit because we've not actually seen this flow. Likewise, a 5-year bond, it was at 10.78. As of yesterday, it closed about 11.09. So these are itching up a bit because, you know, after they've seen all this, that the flow are not really there. There's tendency that the people who are taking it may want to start selling, and that may be attributed to the reason why this yields are a bit itching up.
Would you call this a bit of an overreaction from the markets? Because like you mentioned, the flow hasn't actually come in yet.
Yes, we don't have any empirical data on this, but it's an overreaction which you always expect in any market. The volatility has to be there. People are taking position in anticipation of an event, and if that event doesn't actually, this is that it's going to reverse, and that's what we've actually seen yesterday from what actually played out.
Let's touch the FX market because that's something that's also in the news recently. We saw the Naira strengthening significantly last week, also on the back of that news, and of course some other changes which we've seen with the treatment of BDCs in the market. But yesterday we saw that, I think the interesting point to note from the demand at the WDAS was that demand significantly shot up to well over 300 million.
Yeah, like we expect, this flow we are talking about has to come in foreign currency. All of them were all sentiments. As of Monday, the demand from at the official market was about 192, and CBN offered 150 and placed the stop rate at about 150.9. Right. As of yesterday, Wednesday, demand was 300, which is unexpected from even the participators in the bid. So, but CBN saw that may create a lot of pressure in the interbank market. They decided to inch up what they sold. They sold the 300 demand as again the 150 they offered. And at the end of the day, before then, there has been already a small depreciation in Naira at the interbank market. But despite that, since CBN actually made sure that Naira appreciated at their own official end, it took a lot of small pressure out of interbank closing rate. But at the end of the day, it closed with little depreciation because of how the CBN has actually solved the pressure. Well,
one interesting point for me with the CBN auction results yesterday was that the Naira strengthens to 150.4 compared to 150.9, like you mentioned on Monday. And to me, that implies that the market was actually expecting the Naira to strengthen, given the fact that there was so much demand, and yet it's still strengthening because of the marginal rates and, of course, the way the Dutch auction system works. So that implies to me that people were actually expecting the Naira to strengthen further.
You have to understand that the pressure is not only eased out by the official market. the people from the autonomous also sold. That may be attributed to the reason why actually appreciated, you understand? So, but the issue is that the demand is that CBN has a way of managing this. And if that's the case, though it's a Dutch auction system, you understand? But what played out is that CBN had put it at that particular position. The other pressure pushed to the parallel market.
And you just mentioned the parallel market, where rates I'm hearing at well over 160 naira to the dollar, 162. Right? 162. So to me, that in the past, that's something that probably will have scared a lot of people, because once that premium is there, we begin to see a lot of arbitrage and people looking for ways to get money from the official market and transfer it to the parallel market. What are your expectations? Do you think that we're going to see that interplay this time around?
Yeah, as far as the demand for forex in Nigeria is still there, we'll see that, coupled with the issue of restricting banks to selling only 250 million per week to BDC, I think they moved the pressure to parallel market. And that's where we actually have an issue with, because presently, if you actually want to rate Nigeria and say, where is the currency of this country, do we use the official market or do we make use of this parallel market rate as where the Naira value should be?
Okay, now let's move a bit further ahead. MPC is in a few weeks. What are your expectations? We've seen rates come up well over 2 percentage points since they started hiking rates in September. And what are your expectations this time around?
My expectation is that I don't see the Apex Bank increasing MPR. Presently, you know that interest is one of the strongest tools you can use to moderate inflation. In as much as you are fighting inflation, there's need to look at also the risk sector of the economy. That growth will need it, because what this increase has actually done is a situation where you see that the credit market is actually at a very low level. You see a situation where after packaging the credit, the client will decline, or you see a situation where people who are even coming will come and sign off and take the client. Meanwhile, what you are packaging at that point is not a credit, rather a past due obligation ab initio.